Good morning and welcome to the Daily Wrap from Pepperstone on Wednesday the 12th of July 2017. I'm Darren Sinden. Let's take a look at the overnight changes, any price moves we need to be aware of on the world's foreign exchanges. I just want to focus on two things here today. Dollar index closing last night in New York around 95.76 and euro dollar at 114.67. We can see the respective changes on the year. Dollar index has now lost 6.3% year to date. Meanwhile, euro dollar has gained 9%. That's the euro gaining, of course, against the dollar. I think this is significant, and I think that this rate is going to be the one to watch over the medium term at least. Let's have a quick look at the chart to exemplify what I'm talking about. And here's a chart that plots euro dollar against the trade weighted dollar or dollar index. Euro dollar in blue, trade weighted dollar in green. We can see the trends developing quite clearly, very sharply lower for dollar index over the course of 2017 whilst the euro has rallied, and here's the divergence. I've just highlighted a couple of areas of importance. I think we can see euro dollar push on to 116.21 and perhaps the dollar index come back to as low as 92.58, and those are old support and resistance levels, as you can see from the chart. So those are levels that are of interest to me in those two particular contracts. Right, let's take a look at what's on the calendar, things that may move the market today, and let's jump right in. We've got a pretty packed calendar, to be fair, today. UK data coming out, unemployment, claimant counts and average earnings. That's all out at 8:30 GMT, 9:30 London time. That's been a bright spot in the UK economy, and presumably that will continue for now at least. European industrial production numbers for May coming out at 10 London time, 9 GMT. But the real meat on the bones today, the Bank of Canada monetary policy meeting and interest rate decision. That's at 1400 GMT, 3 o'clock London time. And I think this is probably the most important monetary policy and interest rate meeting of the year. Possibly it could be the most important one of the decade, because this could set the scene really for what's to come for the world central bank. So all eyes on the Bank of Canada. Okay, breaking news and comment that's caught my eye. Hong Kong equities rally and take the Hang Seng index back through 26,000. Hang Seng stood out really in Asian trading, and a very positive performance there. Japan attempts to reopen the TPP trade talks with the US today. Interestingly, Japan is meeting with the US on its own. The other 11 members of that abandoned pact are not present at the meeting. Crude oil made good gains of around 1.6% overnight as the market bets on positive US inventory data later today. I think that's more a case of wishful thinking than reality, but we'll see about that later this afternoon. And staying in the US, Snap shares finished down 8.9% at $15.47. So remember, the IPO price there was $17. But interestingly, the Nasdaq 100 rallied to stay flat on the day. The question is then, has Snap called the top for tech stocks? We might have thought that earlier yesterday afternoon as the stock continued to sell off. However, as we can see, the Nasdaq did improve on the day in the end. So I suspect maybe it hasn't called the top for the moment, but let's watch how it trades a day after the Morgan Stanley downgrade for Snap. Okay, food for thought, something to take away with you into the trading day. And really is all about the Bank of Canada and changes to global policy rates. I've lifted a piece here from HSBC's global policy rate document yesterday. They say in Canada, we now expect the Bank of Canada to raise rates in July, that's today, and again in October 2017, having previously expected rates to remain on hold until Q4 2018. So that just exemplifies how the sentiment is changing. Obviously, HSBC isn't the only view, but I think most people are expecting what they term a dovish hike this afternoon from the Bank of Canada. Right, please take a moment to read this risk warning and disclaimer. Trading on leverage in Forex and CFDs can be a risky business. If you're in any doubt about those risks, please contact your Pepperstone account executive. Thank you for your time. Good luck today, and we look forward to speaking to you tomorrow.